So let's dive in. You guys have heard it, but most important here, we've got to be acknowledging the risk in trading. Nothing is guaranteed. You're going to make some winning trades. You're going to make some losing trades. Probably going to blow up some accounts. And you know, it's important here. This part's good. It's actually useful. You must be aware of the risks and be willing to accept them in order to be trading. Don't trade with money you can't afford to lose. That's actually really, really good advice. Not only because you know, your wife might kick you out if you lose all your money, but you're not going to trade your plan to completion if you're risking capital you're not comfortable risking. So, you know, there's a time, you know, I love to tell you a story when I traded for a hedge fund that basically when I cut my size in half of what I was allowed to trade, my profitability doubled. And there's a lot to be said with trading capital that you're comfortable risking, because otherwise you won't see your trade plan through to completion. All right. Carlos says, you're really great. Who would be bold enough to insult you? Carlos, it's not a complete webinar, brother, until I get a couple insults. And in fact, if I don't get insults, it means I did not do a good job in my webinar. Okay, I wasn't controversial enough. If everyone's like, yeah, okay, great, ho-hum, no insults, I didn't do a very good job. That's funny. All right, so here we go. Before we dive in, let's talk about some myths and maybe some facts, and maybe you approach the markets in a couple ways that perhaps I can challenge you in. And we're going to be talking about the myths of technicals, and specifically with Fib. How about, have you ever heard this or believed this or heard someone say this, that technicals don't work when markets are highly emotional? Okay, think about that. And then number two, technicals are self-fulfilling prophecies. They only work because everyone knows that they're there, and that's the reason they work. Okay, maybe if you thought that before, let's kind of take a look, and maybe I can challenge you on this. All right, so this is the 1929 crash. Okay, the market dropped all the way down to the 200 level. Okay, and if you look at that, the prior rally from 85.90, that's where the Dow was in 1923, 85, rallied up to 386. We dropped down to this 200 level, tested it once, tested it twice, broke through, actually came back and tested it as resistance, and then broke away. Okay, that was the 61% price retracement. So one, the technicals and specifically Fib work when markets are highly emotional. I don't think there was a more emotional market than the 1929 crash. Market, you know, the economy is only 150 years old, 155 years old. I don't think they'd ever seen a crash like that before. So that was the most emotional market the U.S. has ever seen, number one. And number two, I can tell you back in the 1920s, nobody knew what the heck Fib was. It wasn't until the 70s, 80s, and 90s that people started applying Fib to the markets. Guys like Bryce Gilmore and Larry Pesavento and Bob Miner, Robert Prechter, those guys started applying Fib. So 50 years earlier, nobody knew what the heck a Fibonacci retracement was. So there is something to this highly emotional market that caught the low twice before we finally broke away. Okay, so that's Fib. A little bit about me, and I'll dive in. My name is Todd Gordon, and I'm the founder of TradingAnalysis.com. And as I said, I am a corporate flunky, corporate dropout. I used to work on Wall Street. I was the senior tech analyst for Forex.com. I traded for Gain Capital Asset Management, which was a hedge fund. I took the same technical approach I'm going to teach you here to the fund, and traded my own account since I was 18 years old. I'm 36 now, so I've been trading half my life. So, wow. I guess I'm getting pretty old. I've actually been trading for 18 years. I shortchanged myself a couple years. So it's my wife, Trish, Jake, and Brody. I live in New Jersey. Not from New Jersey, upstate New York originally. I don't hang out with the Jersey Shore or anything like that. Those are the boys, Jake and Brody, year and a half. They are a handful, and they were born on a Fibonacci day. Thanks, Pat. Appreciate that. You guys may have seen me on CNBC. I do once a week. I've been working with the folks at CNBC for about 5 years now, and I've done Fast Money, and I'm actually hosting my own show now, believe it or not. It's an online show. It's called Trading Nation, and it's actually very short-term in nature. We take trades. We look at the markets in the same technical approach that you probably focus on. I do it with my friend Andrew Keene, who's in a similar area of the markets as I am. So you guys, and I've done Fast Money and all this, and one of my greatest hits here. I have it set up for you. I dropped the microphone live on air. Mandy Drury and Brian Sullivan are laughing at me, and then that's actually not even the worst thing I've done on CNBC. I actually recommended a stock that was no longer trading. It was delisted. Genentech, DNA. I forgot that it stopped trading a year ago. So, but I've done it like 300-400 times, and it's been pretty awesome. So I bring the technical approach to it and talk about Fib, and my producers looking at me like I'm crazy, but that's fine. And CNBC's been good, and I've met some fun people through the years, and I kind of crack up at putting this picture in there. But yep, he was at my wedding. Love him, hate him. He's entertaining, so we'll see what's going on. So I've met some fun people. The trading industry's been great, and this guy's my favorite. How about Cliff from Cheers? So pretty fun, pretty fun. So that's who I am. Let's dive in. Again, I want you guys to trade the way that you're comfortable trading, okay? But from my point of view, I'm kind of a hyper guy. I get a little antsy with my with the fingers on the keyboard and trade a little bit too much. So I want to kind of get you to look at your approach to trading, okay? And Mike did a great job with the psychological aspect and keeping yourself accountable. But let's kind of figure out the tools that we use, and maybe are we using the right tools, or should we look at something else? So what I mean by that is, let's take a look at the Dow, and this is stochastics MACD reacting to the Dow. So if you first started trading, you probably had a couple indicators up, and you're like, all right, which indicator do I use? First of all, stochastics are reacting faster than MACD, so which signal do I take? And then you got to figure out, okay, well, all right, there's a signal in stochastics, all right, so I'll take that signal. By the time you get in, price action has already moved because indicators are reacting to price action. So basically what you're trying to do is react to one of these signals. By the time you figure out which signal it is, okay, fine, that is reacting to price action. And everybody else that you're competing against to make money in a trade is reacting to the same thing you're reacting to, because we all pretty much use the same default settings in the indicators. So you're reacting to multiple signals, which are in turn reacting to price action. So you're doing what everyone else is doing. How do you expect to make any money? Like, I just don't get it. I've never been able, in my 18 years of trading, and trust me, I'm still a rookie in this business because I've only been at it for 18 years, but I've never been able to figure out how to make money trading something that is purely reacting to price action. The only success I've had in the markets is when you anticipate price change, okay? And this is not the secret bullet, this is not the holy grail, but it is the holy grail of keeping me away from myself, or keeping myself out of harm's way from reacting and chasing price. Okay, so an example of a winning trade is this. This is a live trade I put on ITV. They don't all work this way, but this is how I want it to look when it does work. Okay, so we anticipate support by true fixed indicators like Fib that I'm going to teach you. If you get to move down into the price zone, boom, you're in, no hesitation, you get the trade on. This one, you get a 25-27 call debit spread in ITB, the ETF. Okay, they don't all work this way, trust me. If it didn't work, I had a very tight stop below, and we risked X to basically make 3, 4, 5X. Okay, and trust me, I'm the first one to tell you I get stopped out of trades. I'm proud of my stops. They're small and they're tight, and I'm proud of my winners. They're not as frequent. Those big winners are not as frequent, but that's what we're trying to do here. Another example, McDonald's anticipating resistance into Fib, into this Fib resistance zone. If we get the entry, perfect. We're looking to be short between 97 and 99. If you get the signal, you're in immediately. This one works. Okay? So that's what we want a winning trade to look like. Anticipate. Wait for the market to come to you. Trade as a market maker, and the only way you can do that and identify the levels at which you'd like to trade is by using some kind of system or methodology or indicator that anticipates where price might change. Okay, if the market goes to your anticipated reversal zone, boom, you're in, no hesitation, premium entry point, tight stop loss, and that's how you want to roll. All right. So the analogy I like to use is with Fib is you want to kind of plan a trip. You're staying in Vegas, and I'm sure many of you have been to Vegas, and you're like, okay, I'm staying at Caesars, and I want to go shopping at Encore. So like, all right, so I go out like 1 block, 2, 3, 4 blocks, maybe like a 5-block trip. In New York, 5 blocks would take, you know, 20 minutes, 15 minutes to walk. Vegas, you gotta go like over the escalator, down the sidewalk, past the guys handing out those little brochures with the naked ladies on it and all that ridiculousness and stuff like that. And by the time you finally add up all the twists and turns of your journey using the little scale down there, then you start to anticipate really how long this journey is going to take. Okay, and then you prepare accordingly. Okay, so if you have an idea of how long your journey or your trade is going to take, you can position size accordingly. You can pick out the right strike, the right expiration, and stuff like that. So the Fibonacci to me is the little scale down here that helps you plan your trade. Okay, so these are the fib numbers we're going to use. I'm not going to spend any time on the math. You guys are more than happy or more than welcome to have this presentation. So that's the math. And how many of you right now are thinking, or were thinking, great, you know, fib it's too subjective. Like I don't know where to start and stop it. Like I don't know which Fibonacci ratio to use. There's a bunch of them out there. Like how many people out there are thinking that right now, and you have your doubts? Type in the question mark right there. Let me know. I hope you do. Or if you're already using fib, let me know. Okay. If you are, I'd agree with you in that it can be really subjective. And last, right, stop your Fibonacci analysis. Okay, and the way we can do that, I can make it very clear for you, is by this concept of swing waves. And this is pretty common. Swing waves, you pick up any basic technical book, and a swing wave will be defined by a swing wave high with a lower high to the left and a lower high to the right. All right. Swing wave low is a low bar with a higher low to the left and a higher low to the right. It's just a short-term change in the market. Okay, up close, swing wave high right there. You get a high bar with a lower high left and a lower high right. Swing wave low, same thing. Low bar with a higher low to the left and a higher low to the right. You're not going to know you have a swing wave until this bar closes and you're on to the next one. Then you're like, okay, I know that was a swing. So how does that help you? Here's where we start getting into it, in that we need to start breaking these down and classifying the swing waves so we can figure out how to start and stop our fib. That's with major and minor swing waves. So a minor swing wave is a swing in the market that is not exceeded in the 5 bars prior and the 5 bars following your swing. A major swing, and don't worry, I'm going to show you what these mean. A major swing is a swing in the market, swing high or low, that is not exceeded in the 13 bars following and the 13 bars to the before. So here's what's going to look like on the SPY. Okay, so you have a swing high here, all right, and you're simply just going to count 5 waves to the left, or sorry, 5 bars to the left and 5 bars to the right. And once the market starts to break away and you get your 5th bar, you're like, okay, I know that's a minor swing in the market. Now, if you were to go 13 bars before, 13 bars following, you have a major swing wave. Okay, it's these major and minor swing waves that are going to help you figure out exactly where to start and stop your fib analysis. This is hindsight analysis. Okay, this is all looking back in the past and qualifying each swing in the market and figuring out how substantial it is or how important it is. So this is your minor swings in purple and your majors in blue. Don't worry, I have an indicator, a simple indicator program for you to pick out these swings. It's not a big deal. You don't have to count 13 to the left, 13 to the right. I've got an indicator built in all the major platforms that I use on my charts all the time. There's TOS, I have a TradeStation, eSignal, Ninja, MotiveWave, all the major charting packages I have it built. Okay, so just kind of an example of where we're going to go, and there's only so much I can teach in the 45 minutes that where I'm going to be talking here, but it's through the combination of the purple and blue dots. The blues are your majors, the purples are your minors. It's by looking at the different swings of a market are you going to be able to figure out, you know, where starting and stopping points are going to go. Okay, so this is just kind of anticipating using the prior swings. This is a major swing, that's a minor swing, projecting in the current price. You know, this is what we're kind of looking for, is a pullback. We even did a kind of a deep double test of support there, and then the market wind up rallying from there. That's the kind of setup we want to look to take. And I'm going to define the risk. I'm going to define the reward for you using the Fibonacci tools. I can tell you the risk is just below the support zone, and we're going to look to upside Fib extensions and Fib projections to figure out where to take profit. Those of you who are options traders, if you're looking to put on credit spreads, we're going to be selling below support, selling premium below support. If you're doing debit spreads, you're going to be buying at the money or slightly in the money calls and selling your short strikes up around your Fib extensions, Fib projections. Just kind of a sneak peek for you. Okay, so let's just take a step back here for a sec before we get too far in. Let's determine the trend of the market. And most of the setups I'm going to talk to you about right now, and I'm actually looking at a couple of setups in the market now, are going to be trend trades. Okay, and I think the easiest way to determine the trend is looking at the 55 EMA. And you know, I don't care what the actual level of the moving average is, what price it's at. I just want to know the slope. I think the 55 is a pretty good indication of a tradable trend for guys who, you know, like to be in a trade for whatever time frame you're on, 10, 15, 20 bars. Okay, if you want to look at a 15-minute chart, fine, you can look at the 55 EMA. You'll be in for 15 or 20 bars. If you're a 3-hour chart, 15 or 20 bars. That's about average, okay? So if you like to trade that size or that percent of the chart, fine, okay? So back to Fib, now that we know what the trend of the market is, now that we know what swing waves are, retracements are your basic Fib tool, okay? And what we're trying to do with retracements is to figure out how far the market's going to pull back against the primary trend, which is defined by the 55 EMA before we resume the uptrend, right? So that's just a little model of your Fib retracement. So you got a stock that goes from $200 to $300. The dotted lines are 55 EMA. You're starting to move up. You're looking for a pullback in order to establish longs. And most of the Fib kind of education out there stops with this. And you're like, all right, buy a pullback. And you're like, all right, well, which level do I use? You know, I mean, there's like 4 of them on there. You know, how do I do this? Okay, so we teach a very specific way as to how to start and stop the Fib, and then also to figure out where the pullback should end. All right, so the first step you want to kind of look at is you want to identify the trend of the market. And the 55 EMA is higher, so we're looking for longs in this particular setup. And you want to look for the market to start to pull back. We like to buy pullbacks because trading the end of corrections keeps your risk very small on trades. If you're trying to buy breakouts, your risk tends to be very big. So the first step to using retracements is in an uptrending market, which 55 EMA is up, you want to find the highest major swing wave. So the highest blue dot right there. You then want to find the most recent blue dot that is below the current price. All right, so current price is here, first blue dot is there. That tells you that this is your trend swing that you want to focus on and apply the Fibonacci retracement tool to. So you want to go click the beginning. For longs, you want to click the beginning of the swing first, the end of the swing next. Then your retracement levels are going to unfold. Okay, now you're going to be on guard for entries. And here's how an entry is going to unfold. You're looking for a 3-wave pattern. Okay, guys, I never buy the first pullback in a trend. I think there's more head fakes against the first initial pullback than anything. See, a lot of people try to buy a pullback to like a trendline support or maybe a moving average or whatever. The market a lot of times will try to act strong, try to break out, but then what they'll do is they'll put in a head fake. It'll go up real close to the highs, then it'll drop. And it's going to try to get below this first reactionary low, stop as many people out as possible. So I make a habit to never buy the first pullback that is just a straight, simple pullback. I want to see the market play some head games with people, try to shake people out, because once it's done, then it can start to move higher. So you're looking for a swing wave low, and I want to see either a purple or blue dot, don't care which one it is. Purple dot low, I want to see a swing up, then I want to see a stop run below this first reactionary low. Okay, it's once you get that stop run between the 38 and 78% retracements is when we can start to look for entries. Okay, here's another example of a trade. Starbucks, we put this trade on 55 EMAs up, no problem. You find the highest blue dot. Okay, that's the top of your swing wave, so that's going to be the top of your fib retracement. Find the most recent blue dot low right there. So just a very simple, objective way to start and stop your fib retracements. Click the low first, click the high second, all your retracements unfold. Now you're looking for that three-wave swing. So here's Starbucks, and again, we put this trade on. We sent it out to our research clients and our trade signal clients. So you get the first reaction, you get a purple dot, you get the blue dot, acts real strong, tries to break out. This was nasty, gaps down against you, blue dot low, then it starts to go. So that was in between the 38 and 786 retracement. So that's a perfect example. The market acted real weak on the gap, closed the gap, and then what do we do? This is the actual text message we sent out to clients. And again, I'm showing you some winning trades. I have losing trades. I'll be the first to tell you. But this is just kind of what we do. So we did the 52 weekly calls in July, sold the 53.5s. Okay, so you have the three-wave push. We bought 52.5, sold the 53.5 against our first Fibonacci extension target, which I'm going to introduce to you next. And then this one just went right up to the target, and we actually kept some of the long calls just because it's been so well. So just a short-term little Starbucks trade on the setup that I want to show you. Okay, so we covered ways that retracements to determine the trend. We're going to start at the blue dot, align the trade with the direction of the 55 EMA, and look for that swing into retracement zone. Okay, so if you guys notice, one of the things I said is trades doesn't really matter. I'm looking for the pattern down into the retracement zone. So where it exactly is going to end, I just want to see the correction take the wave swing, then we can get on board. And I have very specific entry patterns that we use to get on board and try to take advantage of the so follow about 7 different reversal patterns down into fib support zones going forward. So those are the entries. Okay, entries we just covered. The exits. Okay, we're going to use another Fibonacci tool on a third Fibonacci tool, extensions and projections. So projections are going to help you either exit a winning trade, or it's going to help out a strike for a debit spread, or a management point for credits. As you start moving into your upside fib objectives, you're going to start either managing the base debit spread. We're going to do that with fib extensions. So fib extensions, I'm just going to keep going with the same concept. 55 EM, you should the 3 ways should pop out to you. There's actually 2 of them. There's one here. There's your first pullback. You don't pull back up. Nasty gap. Closed the gap. Went up to new high. Then actually we did another one. We did a first one. We did a false break. Then we went down. Stopped. Okay, so there's 2 3-wave corrections there. Nasty. So if you want to corrections are done, how far the next trend swing will go, and it's actually an extension is really a retracement that goes more than 100%. What you're going to do, like the beginning of the correction first, the end of the next. Your retracement tool is going to go past 100% up into your target extension levels. So what that means is you're going to click the beginning of your correction first, and you're correct. So let's say this is a $10 drop. That's a $6 rally. 78.6. That's a $7.80 rally. That's a full to 100%. Get past 100%, you start going into the extension territory. This went right into and dropped away. So basically, if this was a $10 drop, that's a $12. The next extension you look on the top side, look for is the 1618. So if you're doing the swing, you get a swing dot there, a swing dot here, a swing dot, your entries here. You're going to decide whether you want to sell premium below the market up into those Fibonacci extension levels that I mentioned. Okay, so options trade, and those of you who are trading options, let me know. Just type in, you guys trading options, stocks, just type in, let me know what you're doing, and I'll know who we're working with here. Okay, so at the money debit spreads, those of you who options spot, that must be Forex, right? We're getting mostly options here. Interesting. That's good. Are you guys, how complex? Are you guys doing credit spreads, debit spreads? Are you doing real complex? That we got some futures in there. Okay. Put it this way: on a scale of 1 to 5, 1 just buying simple options, and 5 you're doing like, you know, calendar, 5 being the strongest. 1 to 5, what do you think? James is okay, perfect. Hey, problems. We got some 2s. Pretty widespread. Come on, guys! I threw you a softball. Nobody threw it back. I'm a 1.618. I sent my buddy with us gift for his wedding, and of course, she had to send him 100.8. The other bad joke is usually in a room, I find this is Fibonacci, and 38.2% of the room doesn't. And the other bad joke I have is usually before I did, I used to stop at 618 in the morning, but that's been shot right to hell because those kids don't like to sleep past 5:30. Okay, so into debit spreads. Using those tools that we picked out, fib retracements and fib extensions, the at the money debit spreads. Okay, we're gonna formulate a strategy around those 2 fib tools. They're best with inexpensive stocks. You know, no price lines at $1,300 or $1,500 or whatever price line is now, or when the spread between the long and short options is less than $10. Okay. At the money debit spreads usually even risk-reward ratio, so you're risking 1 to make 1, give or take. But I think, you know, with a 1-to-1 risk-reward options market, will say you have a 50% chance of success in the trade. You know, I think with the methodology that I'm teaching here, I think that probability is higher. I think you can cheat it a little bit. So at the money debit spread, all right, cheaper stocks. Okay, when your spread's less than $10, right? I mean, I don't know if anybody's buying, you know, 125 calls and selling 135s. I mean, $10 is pretty wide. All right, so generally I like to do it with less than $10. Okay, so what we like to do here is we have this was a 3-hour on Apple, but if you look inside of the intraday down to a 1 hour, we did get a 3-wave swing, and basically we did get the push-ups. You got purple dot. You get the move up, okay? Anytime you get a move up, this is one of the setups we teach. Anytime you get a move up to the 100% and you begin to back away, we got another setup here on the 1 hour chart. This is a 3-hour custom time frame on toss. A setup I like to trade is if you get up to the 100% and then do a 3-wave pullback, usually you're going to get up to the 1.618 of the prior trend swing. So you got purple dot telling you that's the trend swing. So from there, you're going to go up and project to the 1618. It's a setup that I'm going to teach you. Okay, so you buy the at-the-money calls, 128s, you sell the 130s. Okay, you're just looking for a move up to the 1.618 projection. There's a little bit of Elliott in here, but the middle trend wave would usually go to the 1.618 of the first trend wave. So that becomes, your long strike right at the money. Out of the money becomes a 1.618 projection. Buy the 128, sell the 130s. Starbucks, this is the trade we put on earlier. So we have a nice move up. We're just doing an extension of this correction right here. So just retracement more than 100%. There's the 786. I took the 100 out. We're going to look for a target up to 54.5 to 54.97, call it 55, into the Fibonacci extensions. So basically, what we're doing is going to take a combination of prior trend swings, project them into this swing. We're going to take a measurement of the correction, project it higher. I'm going to teach you to take basically the temperature of all the swings in the recent history here and help you figure out where the most likely direction where the market's headed. Okay, so you're going to use a lot of information to figure out where the market's going over like the next swing, right? James, is there a way to use fib retracement to do a fib extension? Yeah, I can show you real quickly if you like. Here's the setup I'm looking at now. Actually, we're looking at Tesla. So let me just do a quick example on Tesla, if you don't mind. You know, I'll just keep an eye on my time. I know it's, you know what? Actually, even Amazon's fine. I'm looking at Amazon. I was going to use TOS, but Motive Wave came up. This is fine. So this is a 1 hour on Amazon, right? So you've got blue dot to blue dot up. You get a swing down, a move back up. We tried to make a low here. This was a trade where you would have taken a small entry. You would have been stopped. We went down and made a new low. So you still get a 1, 2, 3 pattern. Now we're starting to look to get involved. Okay. Now this is going to be an example of the next setup. When you have a $500-600 stock, basically what you're going to do is you're going to look to do some out of the money call spreads. So that's not going to be a great example. Let me just sit on that one for the next setup. Let's do Tesla. Let's do Tesla. Okay. Here's Tesla on the 3 hour. So we have a nice 3-wave push down. All right. This is 260. I mean, we're going to try to get up to the 1272. So, you know, we're looking up for 300 to 305. So if you just do a retracement of the 3-wave correction, right, this is going to be a higher price stock. Okay. The higher price, like the Amazons and the Teslas and stuff, those are the NASDAQ stocks that are kind of leading the way. So there's a couple ways you could do this, but basically the entry has already fired off. If you're not involved in the Tesla trade, no problem. There's going to be kind of 3 steps you use. The first one is you want to get up to the 786 retracement of this drop, of the 3-wave drop. So in the near term, you could do like 265, 275, call spread 265, maybe 270, 275 if you want to just do a $5 wide spread, get up to the 786 retracement. Okay. Once you get through the 786, you're not going to worry about the 100%. You're going to look to get up to the 1272. So I would look to take this trade in options in half. Okay, cut it in half. So let me get my little labels out here, markers. First trade is going to take you up to the 786. So I would like to do a call debit spread by like 265, 275 up to that area. If you want to cut it a little bit, do 270, 275, that's fine. Once you get through here, then you want to move up to the 1272 of this correction. Once you get up there, reestablish the trade and try to get up to the 1272s. Okay, so jumping ahead a little bit, so let me get back on track here. 55 EMA, yeah, I know it's not up, but I can tell you that the trend is up in Tesla. Okay, let me just minimize this and let's get back on track. Sorry, I'm kind of jumping into charts and I should be staying on track. Okay, so let's get back. out of the money. So we just did at the money call debit spread. I just jumped ahead and did 2 out of the money call debit spreads. So slideshow from current slide. Discard. From current slide. Okay. All right, we're back. So, so that was the at the money for cheaper stocks. Unfortunately, I brought up 2 kind of a little bit more expensive. So if you're doing something a little cheaper, around $50 like Starbucks, you could just buy at the money, go right to the 1272 extension, take it as one trade. But more expensive stocks, we want to kind of break it up. Okay. So before we do the out of the monies, let's talk about this. Let's finish this up. So for at the money call debit spread, identify trending market, either 55 EMA or higher swing points. You're going to look for the 3-wave correction down into the 38,786 retracement. Can be major, minor swings, no problem. You're looking for that 3-wave pattern. 1, 2, 3. 3-wave swing down. Okay. There are entries that I'm going to teach you here. I'm not going to have time here today, but I will have information to show you how to go to the next step here. For cheaper stocks, you can buy those at the money calls once you get the reversal signal and move up into your extensions. Okay, so this was 208, 213 in the SPY. Okay, $5 wide spread, very doable. Right? I'm going to skip entries just in the interest of time. But one thing we haven't talked about yet is the ideal expirations, right? So we've been talking about price, but how about time? So real quickly, what you want to do is use your swing waves indicator. If you're looking for a trend trade, you basically want to look at the prior blue dot to blue dot distance, time elapsed. Once you get the 3-wave pullback, you'll then project that forward. So if the prior distance between blue dot to blue dot in a trend is 13 days, you do not want to be trading options that expire before 13 days. Ideally, you want to get out to 161% of that. So 13 days times 1.618, that's going to be 6.5 would be half. So about 7 days past 13, so it'd be about 20 days out. Okay, so that is real to do this. GoPro, here's an example. Blue dot to blue dot on toss. There is a fib extension time tool. Whatever that distance is, the minimum you want to be trading is the 100% time. Okay, so whatever time elapsed this was, projected up from the end of what you believe to be the end of the correction, and then you're looking for a minimum of July 24th. So you don't want to be trading options whether you're selling credit spreads below or buying debit spreads. You don't want to be trading expirations prior to July 24th. You want to be going out to probably the 1.618, which is just off the screen, which would be the first weekly series in August. Okay, so it's important not to be trading options that are too short in duration because they could be, out. You could be out before the move really happens. Or if you're selling options that are, you don't have very much time left, very much extrinsic value, you're not going to be getting very much for your credit spread. So, sell options that likely have the most premium in there, and by using these tools, you're going to be getting more premium for your sales and not cutting yourself short from moves in debit spreads that kind of go without you on board. Okay. So here's kind of Tesla all kind of wrapped into one. This is I'm hitting you with the heavy stuff. Right? So you get blue dot to blue dot, you get the 3-wave swing down, you get your entry here, and again, we can't go through the entries, I just don't have time, but you look at the distance elapsed in the first swing wave, blue dot to blue dot, whatever that distance is here in red, projected up from the end of this correction. And all the major charting tools have this, right? So your minimum is going to be the 100% on June 24th. 1.618 is going to be June 25th, right? So you really are just looking for a short-term little weekly trade here. Now, some of you guys might be buying like weeklies that are 2-3 out, maybe monthlies. you're buying way too much time for what the market has in its tank for the amount of time that it's taken for a move to happen in the past. So you need to have an understanding of what's happened in the past to figure out what's likely to happen in the future. Okay? So we talked about this out-of-the-money debit spreads, right? Best with more expensive stocks. I touched on it a little bit. If you have Netflix at $400, you want to get up to the 1272 extension. What are you going to do? Buy 415, sell 505s. You're not going to do an $80 wide call spread or $90 wide call spread. No way. Okay. So what we need to do is figure out whether we want to be buying out of the money call spreads on longs or sell credit spreads below Fibonacci support. And the way we do that is with the IV filter, implied volatility filter. And this is a little saw's not fast, those of you who follow along there, but I don't think we need to make it so hard. Okay, the IV percentile right there, if it's below 50, we generally teach and train our traders to be selling. If it's below 50, to be buying debit spreads. If it's above 50, to be selling credit spreads. And the way you'll do that is just below the Fibonacci support zones, right? So this is, again, another trade that we put on, just a real simple little Netflix pullback. It had a 6 IV percentile. It was right after options, so the IV crush just destroyed all option values. Had a nice 3-wave swing, so I just put on 5 here. I did it out of the money, 110, 112 call debit spread. Applied volatility was very cheap. We had a nice 3-wave swing into Fibonacci support, and this one was out. We were out in like 2 hours. This one just worked right away, and this was just back in the end of July. Okay,
hey, Todd,
so
just want to give you
again, I'm hitting you with a lot of stuff, but I have a lot to share with you. Okay, there's a lot that I think that needs to go into setting up trades. Okay, we need to trade less. We need to use more tools.
Hey, Todd, don't mean to interrupt, but we do have about 2 minutes left.
Okay, perfect. So thanks for that. So if you guys want to start anticipating better option trades, we do have a way that you guys can continue on with us. All right, so I would like to go through some more trades, but we do have to move on. So if you guys would like to carry on with us, we are right in the middle of a advanced, very in-depth Fibonacci course, Precision Timing Your Option Trades Using Fib. Okay, we're right in the middle of it. So there are sessions that are complete, and they're ready for you to view online on demand. So if you'd like to get involved, we actually have the session ready to go for you. You can watch it. It's about 8 hours of content. So we're right in the middle of live trading session. Here's everything that you're gonna learn here in this course. How to construct those Fibonacci support resistance zone that I showed you. My 4 favorite Fibonacci tools. I'll show you how to set up all your tools, entries, stops. Know when to use credit spreads, debit spreads. We're in the middle of a TLT Iron Condor right now, which is based all on Fib. So basically stop second guessing yourself. Stop over trading. Stop buying debit spreads with expirations that are too short. Sell the ideal credit spreads. Again, all based on leading indicators like Fib. We are trading live right now. I do trade my account live in front of clients. So we are ready for the next live session. You guys can still get involved. Okay, so I think you guys know I like to put the hard work in. It's for people who like to anticipate market turning points that others don't see. This is not the Holy Grail. We're not going to have you on your yacht with the Wolf of Wall Street by March. It's for people who like to put some work in and enjoy doing chart work. Okay, I have a complete plan for you. Money back guarantee, no problem. If you're not happy, let us know. You got to give us a reason, we'll give you your money back. Here's how you get involved, tradinganalysis.com/write, R-I-G-H-T. Here's everything you get. As I said, the session's going on right now for less than $200. You guys can get it for $197. Okay, you're going to get the swing wave indicator. That's the dots that I showed you, the major, minor. We haven't started selling that yet on the website, but we will. And you guys can get it for less than what we're going to sell the indicator for. So we have it all built. Unsolicited feedback from the course, didn't ask for it, but Really, really nice stuff. Phenomenal material and explanations, better time actions, learn more in a few hours, and waiting through several days of study. I didn't ask for this. People just typed it in. I was kind of floored. It was really nice. Love it. Lots of insight. Had my doubts, but made me a believer. Best explanation of Delta I've ever heard. Thank you. I mean, really nice stuff. So I'm very proud of the course. I tried to hit you guys with too much in too short a period of time here in the marketing webinar, but I feel like we put some good content out. We do have a live session coming up Thursday, the final live trading session. You guys can get in and see the course that happened on July 15th, July 29th. This was over 8 hours of material, plus the live trading session, so you guys can get involved in the final class, which is going to be Thursday. So this is all available on the internet, on demand now. You can participate in the live class Thursday where I'll be trading my account. All right, so that's how you get involved, tradinganalysis.com/write. All feedback guaranteed. Feedback has been great. I'm very happy, very proud of the course. All right, normally I would continue on with credit spreads, but we'll have to leave it there. And I'd like to thank you guys for kind of staying over with me, and I hope it was useful. And I hope you guys maintain your accounts through this summer range. It's going to break, and it's going to get interesting. So thanks very much, guys.